Welcome to Middle Class Matters Business News in English from Dr CMA Alagesan on the scam of rupees 7 lakh 50,000 crore by Government of India Road Project Bharatmala Pariyojana, part number 21. 5.1 Delegation of powers for project appraisal and approval. Delegation of powers for project appraisal and approval was as determined by CCA were as follows. CCA directed that all projects to be implemented under BPP-I by NHAI or MORTH were to be technically, financially and economically appraised duly by an empowered and well-equipped Project Appraisal Technical Scrutiny Committee PATSC. PATSC to be set up in NHAI and MORTH was to be dedicated unit comprising experts from Niti Aayog Project and Finance Division. MORTH directed 7th December 2017 and 21st December 2017 NHIDCL to form an in-house PATSC under the chairmanship of Managing Director of NHIDCL with an expert from Niti Aayog and Project and Finance Division of NHIDCL being its members. In regard to the above, audit observed the following. 5.1.1 Separation of appraising, approving and executing authority. As evident from the flow chart above, built, operate and transfer toll projects with no viability gap funding VGF, all EPC projects implemented by NHAI and EPC projects implemented by MORTH with an estimated project civil cost up to rupees 1000 crore. The implementing agency NHAI and MORTH responsible for executing the project was also appraising and approving the project. This mechanism lacked the separation of powers among execution, appraisal and approval of the project. MORTH did not furnish reply to the audit observation. 5.1.2 Delegation of powers. In BOT toll projects requiring VGF from NHAI, wherein financial risk of NHAI was restricted to the extent of 40% of the total project cost, as VGF could not exceed this limit. Such projects with estimated project civil cost up to rupees 1000 crore were to be approved by Minister MORTH, and projects with estimated project civil cost beyond 1000 crore were to be approved by CCEA. However, in case of BOT annuity projects and HAM projects, wherein financial risk pertaining to recovery of initial capital cost and operation and maintenance cost was that of NHAI, the ceiling of estimated project civil cost requiring approval by Minister of MORTH and CCA was raised up to rupees 2000 crore and beyond 2000 crore respectively. Furthermore, EPC projects to be executed by NHAI, wherein financial risk pertaining to recovery of initial capital cost and operation and maintenance cost was entirely that of NHAI, were to be approved by NHAI board irrespective of their estimated project civil cost. Audit observed that there was negative correlation between the commercial risk of the government in a project and level of authority approving such projects. It was further observed that no appraisal and approval mechanism for item rate contracts was proposed for CCEA approval, despite the fact that balance works or languishing projects awarded on item rate basis and add high risk and complexities. An audit observation on the same have been given in para 5.3. MORTH did not furnish reply to the audit observation. 5.1.3 Delegation of powers within NHAI for projects appraisal and approval. NHAI board in its 118th meeting 16th November 2017 delegated powers within NHAI for project appraisal and approval of EPC projects as detailed below. Projects estimate appraised by, approved by up to 500 crore. Internal appraisal committee chaired by member NHAI. approved by Chairman NHAI, more than 500 crore to 1000 crore, Project Appraisal and Technical Scrutiny Committee chaired by member NHAI, Executive Committee chaired by NHAI with full-time members of NHAI being its members, more than 1000 crore, Project Approval and Technical Scrutiny Committee chaired by member NHAI Board. Audit observed that the delegation of powers as above implied non-separation of roles of execution, appraisal and approval of projects and denied the opportunity of scrutiny of projects independently. As per NHAI Act 1988, at least two non-government professionals having knowledge or experience in financial management, transportation planning, or any other relevant discipline were to be appointed as part-time members of NHAI board. This requirement was also insisted by Nidhi Ayog while commenting 23rd November 2016 on the draft CCEA note on Bharatmala pariyojana during inter-ministerial consultation. However, non-government professionals were not appointed on NHAI board. Audit observed that the authority exercised by NHAI in appraisal and approval of EPC projects being implemented by it was disproportionately higher as compared to the authority of NHI, DCL and MORTH in this regard. EPC projects being implemented by NHI, DCL were to be approved by high-powered committee chaired by Secretary MORTH, and EPC projects being implemented by MORTH are to be approved by CCEA if estimated project civil cost was beyond 1000 crore. Implication of such delegation to NHAI, whereby the EPC projects to be implemented by NHAI were to be entirely appraised and approved within NHAI only with no financial capping defined, were evident in test check done by audit. It was observed in test check that in 31 EPC projects of Delhi-Vadodara Expressway with cumulative sanctioned civil cost of around 32,839 crore, 21 of these projects individually had sanctioned civil cost of more than rupees 1000 crore and 4 EPC projects of Dwarka Expressway having cumulative sanctioned civil cost of around 7,287.29 crore. All projects individually with sanctioned civil cost of more than 1000 crore were approved by NHAI board only. In comparison, in case of NHAI DCL, 5 sample EPC projects with sanctioned civil cost ranging between 207.08 crore to 319.93 crore were approved by MORTH. MORTH did not furnish reply in the audit observation. 5.1.4 Powers of NHAI to decide mode of construction. NHAI, which was developing 70,950 km of national highways length of 79,999 km of national highways length determined for BPP-I, was also delegated the power to decide the mode of construction of the projects being implemented by it. Audit observed that the decision on mode of construction were being taken by NHAI without any valid justification on record, and the same has been discussed in detail in paragraph 4.2 of the report. Audit further observed that before delegating the powers to decide the mode of construction of the projects, the appraisal and approval mechanism proposed to CCEA did not define the term project and package. Thus, for taking decision on mode of construction, whether the packages in which a single project was divided for construction purposes would constitute separate projects or all packages combined would constitute a single project was not clearly defined. Resultantly, though decision on mode of construction was being taken by considering project accumulation of different packages as a whole, for project appraisal and approval purposes, individual package was being considered as a separate project. For illustration, in case of Vadodara-Mumbai Expressway, Phase 1 having 5 packages and a composite sanctioned civil cost of 6,271.52 crore, the detailed project report and the mode of construction was decided by considering Phase 1A as a single project. However, while doing appraisal and approval of these 5 packages were construed under HAM mode, whereby the sanctioned civil cost of the packages individually was ranging between 935.52 crore to 1637.01 crore. The packages themselves were considered as a separate project which were appraised by NHAI or MORTH and approved by MORTH, at the phase 1A being considered as a single project for appraisal and approval purposes as per delegation of powers for a HAM project with estimated project civil cost of more than rupees 2000 crore. CCA approval for the same was required. Delhi Vadodara Expressway with civil cost of around 32,839 crore and which was not included in the CCA approved list of BPP-I projects was approved at the level of NHAI board. Similarly, NHAI board approved Dwarka Expressway with civil cost of 7,287.29 crore with per kilometer cost of 250.77 crore as against per kilometer civil cost of rupees 18.2 crore approved by CCA. These two projects, despite being of high significance, were neither assessed by MORTH nor by CCEA. MORTH did not furnish reply to the audit observation. 5.1.5 Implementation of CCEA prescribed mechanism. The appraisal and approval mechanism approved by CCEA for BPP-I was not being followed by implementing agencies fully as observed from the following. 5.1.5.1 Appraisal and approval of NHAI projects. Out of 50 sample projects of NHAI, in case of 8 projects, appraisal by Project Appraisal and Technical Scrutiny Committee was not done due to either these being appraised under old NHDP program or they being balance works or one-time improvement works. For 35 projects out of 50 projects, the notice inviting tender were floated without there being any technical and financial appraisal of projects by Project Appraisal and Technical Scrutiny Committee, as the same was done afterwards. Out of these 35 sample projects, in case of 2 projects, Shamli Muzaffarnagar Package 2 and Delhi Vadodara Expressway Package 18, Project Appraisal and Technical Scrutiny Committee did not include any expert from Niti Aayog. Audit further observed that out of 50 sample projects of NHAI, 46 projects were approved by competent authority after a period ranging from 7 days to 400 days of floating of notice inviting tender for these projects. Annexure 5. MORTH replied in April 2022 that non-presence of member from Niti Aayog in the Project Appraisal and Technical Scrutiny Committee was due to unavoidable circumstances. However, appraisal of these projects by Project Appraisal and Technical Scrutiny Committee was done with due diligence and without any deficiency. On non-conduct of approval by Project Appraisal and Technical Scrutiny Committee for 8 projects, MORTH stated that 3 projects were initially planned to be developed under NHDP. Hence, appraisal mechanism for NHDP projects was only followed or completed, whereas no reply has been furnished for remaining 5 projects. Reply of MORTH may be viewed against the fact that in the event of absence of a Niti Aayog member, the meetings could have been accordingly rescheduled or the independent appraisal of Niti Aayog member could have been obtained separately. Further, non-contact of Project Appraisal and Technical Scrutiny Committee in respect of projects initially planned in NHDP was in violation of the CCEA directions, and considering that these projects were lagging, it was imperative that a fresh analysis and appraisal of the status could have been ensured to complete these projects in a timely manner. 5.1.5.2 Appraisal and approval of NHI-DCL projects. For all the 5 sample projects of NHI-DCL, the Project Appraisal and Technical Scrutiny Committee did not include expert from Niti Aayog and Finance Division in violation to directions of MORTH. Further, these projects were approved under a period ranging from 53 to 174 days from floating of their notice inviting tenders. MORTH did not reply furnish reply to the audit observation. Please like the video, subscribe to the channel. Please share it to your friends and relatives so that everybody will be informed about how our tax payments are misused or swindled by the politicians and bureaucrats in this country. Thanks for watching.